Hey, this is Sunny and Van, your advocate for transparent, trusted, and verified real estate powered by MoovAI. Today, we're running a real green zone search for a one bedroom, one bath home in Vancouver, sorted by min price. And the point of this video isn't just to show you a listing, it's to show you how to judge value properly. Now, the green zone means three things: the price is better than the median price, the square footage is higher than the medium square footage, the price per square foot is lower than the median price per square foot. By the end of this breakdown, you'll know the estimated mortgage amount, the salary required to qualify, the down payment needed, and what your return could look like over the years. Now, before we continue, this is not financial professional advice. This is just for educational and informational purposes only. Now, in this MoveAI application, we are under listings on list view. And from here, we are going to click on filter and we're going to click on Vancouver. Number of beds 1, number of the baths 1, sort by min price. Once you click search, it's so fast and powerful. Within a second, you have all the layouts starting with min price. And from here, we're looking for as much green that we can find. Green under price, green under square footage, and green under price per square feet. As you can see, some are red, some are blue, and some are green already. And we have this plus button here called the action button to expand the layouts for each individual project. We're looking for at least 2 green. Right now, Nanaimo East Van doesn't seem to have 2 greens. Let's go to the next one, Lupine Walk. So Lupine Walk has 2 greens right here. You have price at $605,000 for WA4 layout, and we also have $640,000 for the WB1 layout. The deposit is 10%. Square footage is for WA4, 631, and WB1 layout it is 670. So let's just go with this one to start. So as you can see, it's very powerful already, showing you against the median price in square foot, which one would be the most bang for the buck. So if you click on this one right here, which is Lupine Walk at Seymour Village, WB1 layout, it'll take you to a more of a details page. As you can see, there's more information, different layouts, and you can see all the other variables with 2-bed as well. And it gives you a further breakdown. But point of this video is to stick to this and show you how to really utilize this green zone. So a couple of pictures here. As you can see, the outside of the condo here, the inside of the kitchen, and you can see the full development project is close to the water. Very beautiful. There'll be nice walks on a nice day. Get a nice view. That's a lot of nice. Now, this project is listed at 640,000. Sorry, this layout is, and 670 square feet. Now, what I'm going to do is I'm going to quickly calculate this. Now, this button, what it does is it gives you like a brief summary here, but we're not going to go into this just yet. I really want to show you more or less what the down payment would be, which is $64,000 as a down payment based upon 10% down and based upon 4.18 interest over 25 years. Your mortgage amount is $575,000 and your mortgage payment is roughly $3,100. Now we're going to go into the ROI calculator, and this is going to further break this down for you. Here's the ROI calculator, and we're just going to click on calculate. It's already got the $640,000 sale price, 10% down, and let's see what comes up with this. Now the cool thing here is it's going to tell you that each investor, based upon one, needs over $100,000 just to be able to afford this property. And again, the down payment of $64,000. Now it further breaks this down for you, and it's also going to tell you if you were to rent this out, you get roughly $2,200 in rent. And what that means for you is this could be used to offset that mortgage payment if you yourself are not looking to live in this with your family. If it's an investment, $2,200. If it's you and your family, you're looking at roughly $3,100. Does not include the strata fees. Now let's see what happens if you're renting this out as an investor. You're looking at monthly rent to offset some of the mortgage, and out-of-pocket expense right here is roughly $1,100 out of pocket. Over 1 year, that means you would have spent over 12,000, and you can see over the years it drastically increases. But while you're also paying out of pocket, you're also building equity. So month to month, you're building roughly $1,000 in equity into the property, and over 1 year is 13,000, over 5 years 72,000 in equity, and over 10 years of $162,000 in equity. This chart here shows you the return, and what I mean by the return is we're going to look at the 10-year mark. We're going to go all the way over to property value increase. You see this right here, property value increase. If you hover over it, it gives you the full verbiage of what each individual field stands for. But basically, based upon historical values, and I'm going to click a few over here. We have quite a bit of charts. So this is the historical values that this is pulling this information from. So if we go to 10 years, the potential property value increase could potentially be 1.4 million. If you look at 5 years, roughly 875,000. So will this property go up to that particular amount? It doesn't necessarily that it's guaranteed. It's just based upon historical data. And that's where the trend is. Now, let's go a little bit further. Let's just say you don't have $100,000. You're like, Sonny, I don't have $100,000 and I don't even have $64,000 down. What should I do? I really like this property. I think it's priced right. It's in the green zone. Let's go for it. But I just can't get it. Well, what if you have your parents to help you out? What if you have siblings to help you out? So let's just say there is your parents, yourself, 2 of your siblings. There is 4 of you. If we were to calculate this now, based upon 4 investors, each investor, so as salary, you only need roughly $25,000. And each of you now only needs $16,000 as a down payment. This helps you get closer to a property in the green zone if you yourself can't afford it at this very moment. You should be starting to talk to other people that could potentially help you out. Now, if you have a big group of friends, let's say 10 of them, and we calculate that on this particular property that was listed at $640,000, now you each only need $10,000 a year in salary and only $6,400 down. Now, this is closer to that dream, is it not? Now, you might be like, Sonny, you know what? That seems great. However, I don't really want to be paying out of pocket, right? Even if it's 10 of you, you're still paying roughly $100 out of pocket. Well, let's take it further. Let's say there's 10 of you and you're going to put down 50% of the deposit. And we could calculate that as well. Now, if you look at it, each of you only needs roughly $6,000 a year in salary because there's a massive down payment of 50% going into this property. However, you're going to need a down payment of $32,000 each to even get to this stage. But the cool part is, if you go down now to the net rent, it is $300 of cash flow a month. Now, it is not a massive amount, but a year you're almost at $4,000, and 5 years you're almost at $25,000. And if we continuously review this and you look at the property value increase over the years, you will then find out that it might be a really good investment. But let's go back to one investor, and we're going to calculate that one more time. And let's just do a full breakdown of what to expect over the years. And you could click these arrows to the side, and you're going to get to the summary. So if there's too many numbers, too much going on, you could go to these numbers, and you can see it fully broken down into sentences. And let me go through this for you. If you buy a property for $640,000 with a down payment of $64,000, your mortgage amount would be $575,000. Your mortgage payment would be $3,100 if you yourself are looking to live in this. If you want to rent it out, potential monthly rent would be $2,200, and your monthly loss, which we says the loss because it's out of pocket. However, over the years, if the property goes up, it'll be a gain, but you're at $1,100 out of pocket. Now, equity in 10 years, you would build $162,000. And let's skip over to this side. If the property value increases in 10 years, the property value would be roughly $1.4 million. In 10 years, if you were to sell in 10 years, you'd get roughly $770,000 by selling this property in 10 years. If you add in the down payment, the rent, and the equity built, you'd be at $995,000 coming back to you. Even though it's out of pocket, that added up over and above the property sold, that's how much you would get a return. Now, the total return on the investment is roughly 1,300%, basically 13 times your down payment. If you want to go a little bit more conservative, like, Sonny, you know what? That doesn't seem like it's going to go up that much. Let's do a 50% return on that. So to be conservative at 10-year forecast, instead of 1.4 million, it would now be 878,000. And if you were to sell that property in the 10-year mark, you're roughly at 240,000. Now, if this property gives you this much money, you should stop and look into what you're doing in life right now. If you have any other investments, or you're looking to buy any other property, or doing a business, or whatever it may be, could you see yourself making 240,000 or even upwards of 770,000 in 10 years? A lot of people like getting real estate as an investment, set it and forget it. They might even get a property management company, but they put in the down payment. It's there, it's brick and mortar. You can touch it, you can feel it. Rental income offsets the mortgage. The more you put in, maybe it's a cash flow property. However, this is how you can calculate the green zone. You can calculate how many investors are required to get it more affordable to you. You can also calculate how much down payment is required so you can have a cash flow property. You can also search by salary, which I didn't do in the listings page, but there is a filter where you can physically put in salary, and it'll show you exactly what properties you can afford. Now, that's the end of this video. I hope this is very valuable for you. If you want to log into MoovAI, it's completely free right now. It is in beta. We are growing this. We're developing this, updating on a daily and weekly basis. We are verifying properties. We're onboarding realtors, and we'll be onboarding developers as well. And this is going to make sure that all the information is up to date. So you're not chasing information, you're making strategic investments, and you're making strategic choices. Now, if you don't have time to do all this, you can reach out to the Sonny and Van real estate team. And if you already have a realtor, you should advise them that MoveAI exists, that they can use this. All the homework is already done for them, and we're updating all the time. And the application is growing and getting that much better. We're going to have very dynamic export features that's going to build out dynamic reports. Now, with that being said, Sonny, out.